Boy, what a day in the stock market. The market started off on a low note. Stocks went down in price, and they went down in price quite substantially. They went down more than a percentage point. But then, amazingly, probably about 2 hours after the market opened, it really began to rally, and it rallied 3.6% if we're looking at the NASDAQ here from 11 a.m. Eastern until the market closed. What a rally. Wow. And if you saw the semiconductor space, it was on fire today. We'll take a look at that. And let me make this bigger. It looks like I'm probably not showing enough screen space on that. Let me go through that again. So the market opened, and the market really came down quite a bit, and then it turned around and it started to climb. We had the economic news earlier in the day, and the economic news was that inflation, I thought, came in as expected. I thought it was a good report, but the market went down a bit, and then after 2 hours of the market being opened, the market started to rally quite a bit. So amazing. Now, as we look at the 5-day, the NASDAQ is up 1%. Look at the monthly. It's really trying to climb back and get some of the NASDAQ had a high way up here. And if we look at the high to where we're at now, we're down 6.7%. More recently, we had a nice little pullback of 5.7. That was last week. And man, this market's trying to, win that all back. What'll be interesting is, are we going to top this high? If we don't, this thing's going to keep going down. It's almost kind of a staircase downward. But so Carlos, it was a massive reversal on the S&P today, as well as the NASDAQ. I was talking about that a minute ago. Just a complete reversal, which is interesting. The volatility is super interesting. We have another economic report tomorrow, and that'll be the jobless claims. And if that report comes in as expected, I think we'll probably end the week on the positive. But if we have bad news with that report, it could really drive the market down. We'll see what happens. But this volatility is really, really interesting. I ended up getting lucky, and I did buy mid-morning. I bought, when I saw the lows, probably the one that I'll put out there is about $2,000 at Amazon, and it was a good buy on my behalf. I bought it when it was down quite a bit, and then it rose to end the day. So I've been building up a position of Amazon. It was down. I bought it, and then it rallied back up. So I'm glad that I bought Amazon. I bought $2,000, so that's nice. It's about a $100 gain. Good stuff. I'll take it. So really interesting day of trading. A lot of volatility. And the biggest news was within the semiconductor space. Let's take a look at that really quick. So technology led all sectors. And within technology, semiconductor is where the biggest highs were achieved. And let me try to get there a different way. There we go. So when we look at just semiconductor, it just really had a rally. And there was some news that NVIDIA had where the U.S. government's going to allow them, I guess, to sell their GPUs to Saudi Arabia. And that was perceived as really good news. So here it is, semiconductor, 6.47. That was screaming. And look at their market cap, $5.8 trillion of market cap. That's the biggest market cap now. Keep in mind, like big companies like Microsoft is not in that 5.8. Microsoft's down here or here. But that's a big, big number market cap wise. And just for the whole sector for the year, it's up 105%, and it was up 6.47%. Wow, amazing. Amazing that it moved that much. So a lot of action, a lot of excitement out there. What are you doing? What did you guys buy today? What stocks did you buy? I'd be curious to see what stocks you bought. Today I bought Amazon. I bought some Allstate. I bought some, let me take a look at my portfolio and tell you what I bought. So I bought some Meta. I bought Meta when it was down. Google didn't afford. I bought Nike when it was down. I bought Pump a little bit, nibbled on Pump. I bought PayPal. It was down. Allstate was down. I bought some PayPal, bought Catalyst Pharma, bought some Pfizer, and Zim was up well over 10%. We'll talk about Zim a little later, but it did really well. It was good to see Zim really rally. So it was an exciting day, man, to say the least. And looks like Neil, good to see you again, man. Riot. So you bought Riot, like the blockchain company? Interesting. And then Shadow Guy bought outside the US. CBS. All right. Hopefully CBS works for you. Starbucks in the low 90s. Yeah, you know, Starbucks did have a pullback, and I wonder how it ended today. That'd be interesting. And then looks like Neil, Riot, right? Until November. Is it Riot blockchain that is the symbol, or are you trying to communicate something different? Anyway, more comments would be appreciated. All right, so the big move was in semiconductor. I thought I'd take a look at the behemoth that is NVIDIA and see what that did today, which it moved considerably. And it moved 8% up. If you look at the monthly, it's down. It was down almost 21%, and it's digging its way out of that hole. It's up 13.57% in less than 5 trading days. So go NVIDIA. It's rallying. We'll see how this plays out, because this stock as well, the highs are not getting as high. Each high has been lower. So that's interesting that it'll go up and then sellers will sell, investors will sell. And we'll see what happens on this occasion. That's been a stock, needless to say, it gets a lot of interest. So that's NVIDIA. It's already down a little bit in after hours. Now, other stocks that I thought went up, and I'm not quite sure why, with NVIDIA being allowed to sell their GPUs to Saudi Arabia, I get that. So why did Broadcom rally? Broadcom semiconductors are not as desirable as NVIDIA's, but it really rallied. And it's pulling back a little bit after hours, but that one did catch me by surprise. And I'm not sure why it would rally. It really dropped off a cliff after their earnings, and now it's above the price that before they announced. When they announced, they went down 11%, and now they've dug themselves out of that hole and are completely in the green. So if you go from pre-announcement to now, they're up 2.71%. So the semiconductor space really rose, as well as data center stocks really rose. That was the big move of the day. And we'll see if they can hold those gains, or if it's going to be, up and down for a while. I still think we're probably going to see lower stock prices overall, because we're not out of the woods on this economy. And you could see how some bits and pieces of information just make the market move. In this case, it moved up substantially. The same thing can happen to the downside. We can have a really negative day tomorrow or Friday and really give up a lot of these gains. But I'm really glad that I bought when it was low, and I was able to participate in the rally even that much more. And NVIDIA does drive the market on the semiconductor side, but and you're right that it does drive the market. It takes so much darn attention that I think there's other opportunities within technology, like software companies, to buy those up, while the market's interested in NVIDIA and semiconductor. as well as healthcare. I'm buying into healthcare. So there's opportunities to invest while the market's fascinated with semiconductor, buy away from that action. And then when the market begins to rotate out of there and comes to healthcare or other industries, they will benefit from it with higher stock prices. So that's NVIDIA. That was the big story of the day. The other company that went up was ARM. And ARM is a designer of chips, right? They partner with companies, and man, they flew off the charts today, 3%. So the iPhone 16, I guess ARM was used for the iPhone 16, and it really rallied today. That's a pretty darn good rally. Every time I've looked at ARM, maybe we can look at the fundamentals. It just didn't make sense to me. It didn't seem as valuable as their market cap. They have a very high market cap of $147 billion. And they're a relatively young company. They just IPO'd not too long ago. We go max on this thing. They IPO'd in 2023, and they kind of stayed down, and they're really up now, up 175%. The revenue is only $3.5 billion, but their market cap is $147 billion. Whew, that's big. It's like 50 times revenue to buy the company. PE is incredibly high. Forward PE is high. Analysts are saying it's a buy, but you have to buy it at a premium. Their growth is good, but it's not like, hockey stick level. It's not like completely vertical. Like you see some companies just growing by leaps and bounds. Not this one. It's just, 31% is great, but it's not phenomenal. It's not super exciting. They are turning a profit, and they do have free cash flow. So the cash flow is good. And these guys, I believe, they do the designing, so they don't have to buy these really expensive foundry operations like TSM does or Intel does. But you can tell by the pain that Intel has been going through. Boy, that foundry business takes a lot of capital, and it's risky. Now, these guys, let's say they did $1 billion of free cash, and they're exciting. I can multiply that free cash times 30, maybe even 40. They get to like $40 billion in market cap, nowhere near 147. So I think investors are projecting these guys are going to keep growing. They're going to get very big. They're going to have profits. But I just don't see it because the growth rate is not incredible. It's just 31%. It's going to take them a while to get massive. Let's say like a Broadcom or an NVIDIA. So it's going to take a while. And as they get larger, the growth percentage will be smaller because the law of big numbers will make it so that it's harder to grow from a percentage perspective. So this one here, I don't get the valuation that other investors have on it. So on the earnings per share, it's at 29 cents. It's supposed to grow substantially in 2025, and then 30% for a couple of years. So that's big growth, a lot of profitability. So if they pull that off, I can understand investors being excited about it. But most of my valuation comes from free cash flows. They just don't have enough for me to be an investor in ARM. We'll see how that plays out. But they had a very, very good day. All right, so a stock that came up on the Discord was CLOV, Clove Health Investments Corporation. And this company provides Medicare Advantage plans in the United States. It operates through two segments, insurance and non-insurance. Okay. So it's a healthcare payer. They remind me of like a Molina Healthcare, I believe. That's what they do. So they are a small cap, 1.3 billion. Revenue is 2 billion. They're currently losing money, so you don't have a PE ratio. No, they're losing money, but do they generate free cash flow? So they do not generate free cash flow. They've been losing money and burning cash. So Clover came up, not quite sure what the play is on this one. The stock chart doesn't look too good. Although, wow, 97%. It's really picked itself up. I think because it's a very low price stock. It's at $2.65. So yeah, if you go from 64 cents up to $2.64, it's really going to rise. But it seems like this is a very risky stock. They're losing money. They're burning cash. Their balance sheet has $254 million cash and not a lot of debt. So that's good. They do have some cash, but they got to stop burning so much cash because they'll run out of it. So Tyler wants to look at GEHC spinoff. Yeah, I think we've looked at in the past. Let's take a look at it real quick. So it's GEHC. I think the spinoffs from General Electric, they were doing well. Here's this one here. Over the last year, it's up 31%. It pays a tiny dividend, but it's been doing well. These guys are the GE Healthcare unit. They sell like the big radiology equipment, imaging equipment. It's all this stuff that's installed in hospitals as well as medical health services establishments. And this company is a $40 billion market cap company. Revenue is $19.5 billion. PE is 25, and then forward PE is going to be 19. That looks pretty good. It has been doing well. In general, it's been good. Since the spinoff, it's been a good thing for investors. It's a buy and according analyst. So it has a market cap of 40 billion. I have plenty of healthcare, but it's interesting to look at this one. So this one here, so you have free cash flow of 1.6 billion. Yeah, I couldn't get to a $40 billion valuation on this one. I could maybe get to 32, maybe a little higher because it is a good company, but I would not show a discount available on this stock. I'd actually show that it's being sold at a premium. Their debt level is reasonable. They got about $8 billion of net debt, and their EBITDA is $3.5 billion. So they could pay off debt and call it 2.5 years. So the balance sheet's in good condition. It's not great, but it's in good condition. So overall, I think this one's a little overpriced. It's in a good segment, which is healthcare. But I think it's a little overpriced. It wouldn't be something that I'd be interested in. So hopefully you appreciate those the comments and opinions on GE. So we looked at ARM. The other company that was really going up is First Solar. So it was up a lot today, 15%. Amazing. So it does solar equipment. Now, why did it go up so much? I guess because Harris had a good debate. So the chances of Harris winning the presidency is a little bit higher. And if you have a Democratic president, they'll probably fund clean energy, which would put a lot of good rebates on the table for tax, tax credits and so forth. So that's why solar stocks really took off. So that kind of makes sense, but that's complete speculation. Interesting. Well, if you own First Solar, congratulations. You made 15% today. A stock that rose that I own, probably the one that was the best percentage gainer, was Zim. It went up 12%, which is great. I think highly of Zim. I think it's a good company with good fundamentals. and the stock just really moves. It goes all over the place, as you could tell. And it really rose. Like buying in this zone was a great idea. And I'll show you this. I try to track good companies that have profits, free cash flow that I think, man, they're really underappreciated. And sometimes the market sells a stock off and I start buying those shares and then it rises and rewards the stockholder. And in the case of Zim, that's been the case. As we look at the market really sold it off, just left it for dead. And meanwhile, they were still operating their business quite effectively, generating free cash. I was able to accumulate a good amount of shares. I think, let me give you an exact number. So I haven't updated the stock price. Let me look at that. 1842. So I own $26,000 of the stock, but my investment's been $18,000. So I'm up 44%. I think the stock's going to really move because they keep operating well and their earnings have been positive. They show that they're profitable, generating free cash. Just they pay a good dividend as well. So I'm glad I've owned it and it did really well today. So good stuff. Good job, Zim. So just a lot of volatility, man. It was really, really interesting to follow the day. And I'm not sure if somebody was interested in Riot, but I think Riot is Riot Platforms. They do cryptocurrency mining. The crypto space has been really beaten up lately. Over the last 2 months, Bitcoin has really dropped in value. So has Ethereum. So the cryptocurrency or the Bitcoin miners, their stocks have really been low as well. And it looks like Riot over the last month is down quite a bit. I believe that's what they do. Yeah, they do Bitcoin mining and so forth. I own BTBT as a miner, and they have a little more diversified business. This one's a $2 billion business. They do about $280 million of revenue. They do have a PE, which is good. It's a strong buy and it's discounted substantially according to analysts. I wonder what they're seeing. So there's 11 analysts. That's a good number of analysts. And they believe that the company in 24 is going to have a 29-cent earnings per share gain, but then they're going to lose money next year. That's weird. So it's a little bit, there's no upward trend if they're going to be unprofitable next year. That's interesting. I wonder if they generate. So on cryptocurrency miners, you got to really examine the free cash flow statement because sometimes they don't allow them to recognize like Bitcoin as cash. And I do recognize it as cash. It's as good as cash for me. So you got to make sure that that gets counted in order to get what I would think is an accurate free cash flow number. But for now, they're really, really burning cash. So this hasn't been, I haven't been in, other than BTBT, and that's a small investment. I haven't been in the Bitcoin miners. This one caught my attention because they're doing cryptocurrency mining as well as providing GPU capacity as a hyperscaler. And that business looks good and they can diversify, both be a Bitcoin miner and a hyperscaler for AI, which I think is a good idea to have that diversification. This one here, I'm nibbling on shares. I think it really has potential to really grow fast, and they are generating free cash. They are generating profits. So this could be a nice little surprise. I'm not putting a whole lot into it. I'm being careful with my investment in it. I'm just nibbling in on shares and seeing where it goes. So that's the one Bitcoin miner that I do own is BTBT. All right, so those are the stocks that really moved today. Any questions that you guys have? Any other stocks you want me to look at? As we look at the data coming up tomorrow, so this is the data that came out today, and then tomorrow we'll have this report is the one that's going to move the market. The initial jobless claims, it's supposed to come in at 230 initial jobless claims. If that number comes in high, let's say it came in at 300,000, the market's going to sell off big time. You're going to see the stock really, really go down. And that's because it'll be more realistic that we're heading towards a good recession. If it comes in right at 230, I don't know. The market could go up a little, go down a little bit. If it comes in below 230, then I'm not sure if it's going to be a little bit of bad news or a little bit of good news. I think the Fed would have more reasons if the unemployment figure came in where there were fewer initial jobless claims, the Fed would have an excuse just to discount by 25 basis points versus 50, because they'd be like, well, the economy, if you measure it by jobs, is doing okay. It's slowing down, but not too fast. If the jobless claims were above 230 or right at 230, they would probably have a reason to bring down interest rates by 50 basis points. But if it's too high, then it really communicates recession's coming. And I think the market's going to react to that and sell off. So that's how I see it. So Michael Benitez, HIMS. We've looked at HIMS over the last couple of days. So that'd be easy to show it to you. Let's take a look. And HIMS does look good, by the way. Good growth. I think I have a valuation on HIMS. So they have very good growth. They have free cash flow. And I put them at fairly priced. And I put them on my watch list because if the stock price continues to drop, I think they'll get more. They'll come into this buy zone that I'm looking for. Back to this buy zone. Right now, I would say that HIMS is kind of around here. They're fairly priced, but if the stock can keep coming down, it might get into a zone where I'd be interested, because this is an interesting company that has good revenue growth and they have good characteristics. Now, today it went up 5%, so it's getting away from a better price that I'm looking for. So I don't think that's going to happen anytime soon. So right now, yeah, it's fairly priced, and I don't buy stocks that are fairly priced unless it's a company I really want to own, which is a very rare exception. I usually wait for a stock to pull back. Like Amazon's a great company, and it pulled back a lot in the last couple months. So I've been buying and snatching up shares because I think Amazon's discounted. So HIMS is a good company. They are growing their business. If you measure by, hey, do more customers want to be customers? Yes. And the current customers want to buy more products. So it's a very healthy business that is growing at a very good percentage rate. So that looks really good. And they do have free cash flow. They're profitable and their balance sheet's in really good health. So overall, HIMS is interesting, but I'm putting it on my watch list, waiting for that stock price to come down. I think we're not out of the woods on a market that's going to get corrected. I wouldn't be surprised if we saw, the market go down 10, 15% from where we're at now, maybe even 20 by the end of October. I think we got more correcting to do. We'll see how it goes. And it's not going to be a straight line. It's not going to be a straight line down or up. It's going to be a little up and down action, but down days are going to be pretty aggressive. We'll see how tomorrow goes. My best guess is tomorrow the market's going to sell off. Today was weird. And today the market was behaving a little erratic. And I think some people are going to come to their senses, and especially the semiconductor industry will probably give back some of their gains tomorrow. We'll see how it plays out, but that's my best guess. And I'm hoping that HIMS, the stock price comes down maybe to $10 a share, and then I can pick up some shares and see that I'm getting a nice discount on a good, interesting company. All right, Huma or HIMS? So Huma are you talking about Humana? I know this is a different company. So Humacyte. So Humacyte engages. So this is like a biotech company. And okay. It's a very small company. They don't make money yet. Do they cash flow? They do not cash flow. So this one here would not be an investment I would make if you really know the company and feel like these guys are going to have a product that's going to explode. It's going to do really well. That would be your investing thesis. That'd be your whole story. That's not the investor I am. I have to see free cash flows. I have to project those free cash flows. And in this case here, no cash, no profitability. So I'd be staying away from a stock like this. So if I had to pick between Huma and Hims, it's Hims. I would go with Hims. Hims already has an ability to create profits, create cash flow. It's giving me what I'm looking for as an investment. Siri. So what's Siri all about? So we looked at this, and what did we conclude last time? So the thing about Siri is this is satellite radio, right? And the conclusion I had previously, why does it give me a funky chart like that? Not sure why this is. There we go. So the conclusion I had on this one here is Siri has competitors coming from every directions, right? And the biggest competitor is I'm on Spotify or some other app on my phone. And that's what I listen to in my car. The whole satellite radio thing is I don't use it. And maybe I'm different, but if I'm using my phone for a lot of media at home, like listening to Spotify when I'm working or working out on my phone, I'm gonna listen to it on my car. So, but you can't take XM into the gym. You can't take it into your home, or maybe you can, but I'm not aware of it. I don't know if they have an app that you put on your iPhone. But I'm a Spotify user, and I think that's their biggest threat is they came in with a paradigm to replace traditional radio, and maybe that was their basis. But then they're getting disrupted by the new generation of media companies like Spotify that run on a digital signal. So I think their business is going to have a hard time growing long term. And my conclusion was I would not want to be in this stock. I don't see them being much more valuable over time. And it's giving me funky slides on that app. So let me go to Google and see if I can get a better chart on this stock. There we go. See how it's gone sideways? That's what in my opinion, that's what it's going to do the next 5-10 years. And that's not the investment I want. I want my stock to double. So Brad, Siri just reverse split. So what's the story behind that? So a reverse stock split means that they took like half the shares off the market. So it should make their stock price higher. They did this a day ago. Okay. So I guess the market did like it. I can't say that's good or bad. What I would say is that, big picture, I don't like their business. Big picture, I just don't see that, hey, Sirius XM is going to be twice as valuable in 5 years. Can't make that statement. I actually think they're under threat by competition all over the place. So yeah, so it was a 10-1. Interesting. So they did that. I mean, we looked at Sirius like 2 days ago, and I didn't know that was coming, but that is interesting. And that's why I'm getting these wonky graphs. So this app can't keep up with it, but Google can. And this is all adjusted, based on the splits. So the graphing here is adjusted. And they have a nice dividend, but it didn't look good to me. The first time we looked at it, I continue to think, these guys, big picture, they're going to be constantly under threat. All right, so Solventum, Solventum's been hanging tough. Solventum is a spinoff from 3M, and they do a lot of the materials, and I'm going to call them consumables that a dentist or doctors and surgeons have to use. That's what they do. I like the business because, we're going to go to the dentist or we're going to go get these surgeries in a bad economy or a good economy. Today it was up 1.55%. It's done really well since their earnings. And this is a new company, right? It's a spinoff. They've been around less than a year. So I got granted shares by 3M and I sold them because I wasn't sure about the company. Now, having gone through a quarter and gotten better data, I've become more comfortable with it. And I'm going to show you my valuation of the company. And I am buying more shares of Solventum because it's in the right space. I like healthcare. And this company's, I think highly of 3M. If these guys were part of 3M, that means they probably have good employees, good culture. They have solid products, because 3M would have solid products. That's one thing 3M was always known for. And I still think they're discounted by 32%. It has very good growth prospects because they're going to focus just on like surgical materials and consumables for health offices, dental consumables, and so forth. Like if you get a tooth replaced or extracted and you need something repaired in your visit to the dentist, they could be using one of Solventum's products, and then they bill your insurance for it or bill you for it. So it's a good business. I like it. Right now, how am I sitting with my investment on Solventum? Let's take a peek. So I've got a number of healthcare stocks. I've got a total of 5, Solventum being one of the smaller positions, but I'm up 12% on it. And let me see if I have to update the stock price, 69.41. And I'm up 16% in less than 3 months. And that's been a nice rise. And I still think there's more room to go. And I keep buying shares on pullbacks. I think it's a good stock to have in my portfolio. So Solventum's a good one. All right. So Brad wants to look at STLA. Stellantis, the car company. So, yep. Yeah, this is their car company. The brands that they own are like Chrysler. They own a bunch of brands. It's a pretty big company, $43 billion in market cap, but $188 billion in revenue. Super low PE, 3.14, forward PE of 3, dividend of 10%. Holy smokes. That's a big dividend. Now, the car business is, the car business is so erratic. I've decided to stay out of it. And I was an owner of Ford, but that stock wasn't going anywhere. And just the market doesn't like car companies. They've got a lot of things to deal with. The biggest thing they're going to deal with, and look at that slide. Here's the biggest threat to the car business, no matter if it's a U.S. car company, a company out of Europe, is the Chinese are coming on strong with their electric EVs. They're making them very affordably, and the quality is there. And we don't need to talk about technology in China. They're very technically capable. They make all the freaking iPhones. They make just about every laptop. So they can make cars. They can manufacture, most definitely. And as they hit the market with their own brands, they're going to put a lot of pressure on Stellantis, Ford, GM, Tesla, you name it. They're going to be under threat. You could still have these novel companies like Tesla could still be a really good brand, or Rivian being that premium brand that also has the commercial vans that they sell to Amazon. But I think Stellantis has a lot of risk with just the competition. The competition with Stellantis, I mean, it's not an easy industry. I don't think anybody believes that. And is it going to bounce up? Is it so discounted that it could come back up? I don't know that you're going to see Stellantis dip into this buy zone and then come back up. I've seen these companies stay down here and pretty much kind of bump along the bottom, unfortunately. And that's because just too much competition. Companies like that are in the red or in between the red and the gray, meaning that they have so many competitors that they're constantly discounting the product. The product is very hard to engineer, manufacture, and then get out to the customer. And then once the customer gets it, they may have a bunch of problems and you have a lot of warranty work. So it's just a really tough business. And I can't say that, is Stellantis going to be worth, double in 5 years, potentially. But it's something that I'm just not seeing yet. I see a lot of threats. Biggest one, EVs out of China. The company Stellantis has not been doing well from some of the headlines we've heard. Some investors are suing. That's not a big deal. They have to invest a lot in their factories. I mean, there's a lot of capital that they have to deploy to have manufacturing lines. So I'm trying to see some of the negative stories. Not a lot of them out there, but the car business is tough. The company that's really risen well is General Motors. General Motors did really well in this category. I kind of wish I would have bought them, but I didn't. General Motors, if you look at their return, they did really well. And it was kind of just staring me in the face. I had to decide, back when I bought Ford a couple of years ago, I could have bought GM, but I chose Ford. And this doesn't look too good, but when you look at the 1 year, it looks really good. Up 36.9%. It's done really well in the past year. And if you look at their trough, it was right around a year ago. So it's done really well to rise. I think I can't say that I love their cars. I think their cars are okay, but I think they're a little too big and their strategy is a little too broad. They're not an EV company. They're mostly a internal combustion engine company, much like Stellantis. Stellantis is trying to pivot to do EVs, but I think that's going to be hard. You can't run two businesses as effectively as maybe the pure play EV companies. And again, going back to China, these companies are not going to make internal combustion engines. They're just leaping into the new generation and just doing EVs. And their EVs are really making noise in other countries like Mexico, where you're seeing a lot of their cars be sold, Chinese cars. So that's where they're taking market share away from GM, Ford, Stellantis, Tesla. And that's the biggest threat that I see for this industry. So Stellantis, I just wouldn't get my head around that because it's not an industry that I would want to be in. But that just means that I don't want to be in it. If you want to be in it and you think, hey, I think I understand the car business really well and I think there's going to be an upward trend, great. That's awesome. But that's how I see it, and I'll share my opinion with you. Hopefully you think it's interesting. All right, so looks like Shadow Guy. Is it possible that 3M would buy back Solventum? I don't think so. They still own 20%, so they'll probably, I don't know what they're going to do with that 20%. I think for stability purposes, I don't see them selling that 20% stake for a while. But buying them back, it just wouldn't make any sense. Why did you spin them off in the first place, right? That would be a big surprise. I think it would catch everybody's attention if they bought them back. It's like, wait a second, why did you spin them off in the first place? I like the focus. A lot of spin-offs work. Spin-offs, you think about it, it's kind of like a really good startup or a really good new business because Solventum already has a customer base. They already have employees. They already have products that are known and are successful in the marketplace. So to spin off a company like that, they're usually very successful and it really unlocks greater value from a market cap perspective. So Solventum is beginning to look like it's going to be a successful spinoff. The General Electric spinoffs were successful. And other spinoffs over the course of time, for example, PayPal at one time was a spinoff from eBay, ended up being way more valuable than eBay to begin with. So that's an example of spinoffs really, really doing well. So, okay, Brad, thanks. Yeah, when I look at the fundamentals on the car companies, I too am impressed. But I can tell you, sitting on the Ford stock and automotive and airlines, fundamentals look great, but the stocks just don't rise. And airlines, I think Warren Buffett swore him off because he's like, I'm never going to buy another airline. I decided to buy United and I made a little bit of money, but I don't think enough. And I thought that Ford, there was just too much value there. And Stellantis kind of has the same profile. The numbers look great, but just the industry forces and the stock investing community, they don't want to buy car companies. They don't want to buy legacy car companies. Tesla's a different animal. Tesla's kind of has a rock star CEO. That one is a fan favorite for the stock market. I'm not in Tesla. I owned Tesla a long time ago and I sold it. But the rest of the companies, the legacy companies, I think they're going to have a hard time. I think it's going to be a while before we see who gets sorted out and how competitive are the Chinese EVs going to be. When you look at that space, I mean, the Chinese EVs, the volumes they're going to put out are going to put a lot of pressure on the car business. And I know that the U.S. can protect this market. Got it. The U.S. government will say, hey, we're going to put a tariff on Chinese EVs, making them less competitive against the domestic rivals. Got it. But the markets outside the U.S. is where China is probably going to do really well with. So that's all of Latin America, Mexico, Colombia, Argentina, Brazil, Europe, Africa, other places where they want to buy a car for a good price. And if a Chinese EV that's reliable is a third the cost of an American equivalent, price is going to win. Value is always going to win in that situation. So that's how I see that. But thanks for the question. I hope my comments were helpful to you. All right. So moving into the trading day tomorrow, as mentioned, let's see where the markets are at the moment. So the markets are, I don't think that's correct. I don't think the futures, oh, here we go. So futures are pretty flat, but they're to the red. I would not be surprised if tomorrow we have a really solid pullback day. It's it was too good of a day, and it was just too much volatility in one day for me to think, okay, that is sustainable. You can't have, and I like looking at the NASDAQ because it has much more movement. When you have this type of movement intraday, here people were careful, and then all of a sudden, just huge buying activity. And I'm like, really? We just had this last week. We just had a huge sell-off. I think we're going to have a pretty solid pullback tomorrow, Friday. And again, I still think we're not done correcting the market. I think we're still going to have some selling activity that's going to drive down prices. Now, I can't tell you exactly the day and so forth. Nobody can. That's what's going on in my head. And I continue to buy on pullbacks. Today it worked out because I was buying around this zone and then it started to rally to my surprise. And, that was a good thing. And that's how I tend to buy, kind of like seeing where the market's at. And then I buy when I think a stock's pulling back by a couple percentage points or a point, depending on the company. Amazon pulled back like a 1.5%. I bought $2,000 of it and boom, it shot up, which was great. Trader Prad. Yeah, man, I imagine Trader Prad that a trader like yourself on a day like this has got to be like super interesting, because volatility, I believe, is something that helps you take advantage of a market, right? So I know we're going to do a live stream at some point. Those are going to be some of the questions that I have for you, by the way, is how do you use this volatility in your favor and make money? So looks like this was one of your best days in a while. Very good. I'd love to hear more about that and see how you're taking advantage of the market. All right. So let's see how tomorrow sorts out. I'll have a live stream in the morning just to kind of kick off the market. We'll have the economic data in on the jobless claims. Again, if we have high jobless claims, it's going to be a red day. And if we have a decent report, it's going to be a flat day, but I'd be surprised if we end up in the green tomorrow and Friday. I think today was overdone, and especially semiconductor, I think, is going to fade. We'll see. I could be wrong, but that's what I'm thinking. So the VIX did pull back. So you'd love to see the VIX stay up, okay? We'll see what happens. I don't know that there's any like big scary news out there that can make the VIX go up. I mean, if we had unemployment come in a little higher, it would be disappointing, but not a complete surprise. So there's no big story out there to create more fear, but we'll see. We'll see where the VIX goes. All right, everybody. So very nice to talk to you after the market closed. And I'll open up the market with a live stream tomorrow. I hope you can make it. It'll be 6 a.m. Pacific and 9 a.m. Eastern. Tune in if you can. And I really appreciate you joining me today, asking questions. Feel free to join the Discord. I know, Brad, you're a member of the community. If you want to join the Discord, it's Victor H Investing on Discord. If you want to join the conference call we have on Sundays, I just need your email address and I'll get you on the invite list, and we can talk stocks and strategy on Sunday mornings before football starts, of course. So that is it for today, everybody. I hope you guys all have a good evening, good afternoon, and I will see you guys, or some of you guys, tomorrow. Take care.